Hello, in this lecture we're going to continue on with our comprehensive problem for a merchandising company. We are now moving to the adjusting process, so we're in the adjusting entries tab down here. You'll recall that what we have done so far is we did all these journal entries over in the journal entries section. This would be done by the accounting department. We're recording transactions, but we're recording them in the format of journal entries, and we recorded the journal entries here, and then we posted those to the general ledger over here, and then we saw that the general ledger makes up the trial balance. So the trial balance shows that we are in balance as of the end of the period in this case. And now we're going to take that trial balance from the accounting department and we're going to move it over to the adjusting department. So we're going to do this with a worksheet rather than using the general ledger. So in the adjusting department, you want to think of it as a separate department, or possibly a separate firm, possibly a CPA firm, and taking the unadjusted trial balance, making those adjustments that are needed in order to make the financial statements correct as of the end of the period for an accrual basis. So we'll start with our information over here. We're going to have the unadjusted trial balance. If you take a look at these formulas, you can see that they're just pulling over from the journal entries tab. So these are just the same numbers from the journal entries tab. And we can see that, of course, we are in balance in that the assets are generally debit balances minus the credits of liabilities, and the owner's equity means that it all adds up to zero, meaning the debits minus the credits equals zero. We can see the zero here in this green zero indicating the same thing. So for this worksheet, we're going to have the debits minus the credits rather than having two columns. And the reason for that is that it really will help us to use formulas in Excel. It'll help us to see things a lot more quickly just by doing some quick calculations. And it'll allow us to only have 3 columns here in this worksheet rather than if we had a separate debit and credit column, we would need 6 columns. So it's really useful to represent things in that way. So it's good to get used to that and see how that could work and does work. So then if we think of our accounting equation, then we've got the assets and the liabilities and the equity over here. And what we're going to do is we're going to take these adjusting entries, we're going to post them, or we're going to record them in the blue area. And then instead of posting to the general ledger, we're going to post it to the adjusting area of our worksheet and just see that quick adjustment rather than having to go through the full process. We just want to see that quick adjustment here and see what the effect is from the unadjusted trial balance to the adjusted trial balance. So before we get started, just remember the rules for the adjusting process are going to be slightly different than the rules for normal journal entries. If you think of these slightly different alterations to the rules, we can understand what accounts will be affected oftentimes without really knowing what we're doing, and then we'll talk about what we're doing. So the new rules are going to be there's cash generally will not be affected for the adjusting department. That usually happens in the accounting process. All the journal entries are entered. The bank reconciliation hopefully has been completed. Cash is good. Then we're generally going to have one balance sheet account above the blue line, and we're going to have one income statement account affected below the blue line for the adjusting processes. This is not typical or not necessarily true for other types of journal entries. For the normal journal entries, it is generally true for the adjusting entries. We're typically going to have one balance sheet account, one income statement account. And we know that the income statement accounts only go up. So therefore, we know that the income statement account has to go up, so the balance sheet account then will have to do the other thing to it. So if we go through that series of questions, then we can figure out what we should be doing. Also note that all of these transactions are going to be as of the end of the month. So for these transactions, it's going to be 4/30. All adjusting transactions will be as of that time period. We're trying to make the books correct as of that time period. Note that they will not be correct as of 4/29 on a perfect accrual basis. That's okay. We're accepting that. We want to make them right when we prepare the financial statements for external users or internal users. All right, so first we have prepaid insurance as of 4/30 was determined to be. So let's go through our series of questions. What's going to be the balance sheet account above the blue line related to like insurance, something related to insurance? Well, we see prepaid insurance. So that's probably the one. I'm going to go ahead and highlight that and say that one is going to be affected in our process here. Note that having the trial balance open, even if you're working on a problem that does not show you the trial balance, is highly useful. I would always have one open. It's like a cheat sheet. And then we're going to have the income statement below the blue line. something with insurance in it, and I see insurance expense. So that's probably the one. So insurance expense. If we look at all the expenses down here, we see that the expenses start here and they go down here. They only have debits, and expenses generally only go up. So we're going to make it go up by doing the same thing to it. These are debits. The same thing to it would be another debit. So we're going to increase the insurance with a debit. I'm going to copy that, right click, copy. Then I'm going to go up here. I'm going to put the debit on top. So I'm in cell C5. I'm going to right click. I'm going to paste it 1, 2, 3. Again, if you paste it this way, it'll change the format. If you paste it this way, it will not. So we're going to paste without changing the format. Obviously, you could type it in here. I do recommend using formulas over here for sure. But over here, go ahead and type them in if you so choose. So we know that that's going to be the debit. If we debit that, then the other account, meaning prepaid insurance, must be the credit. So I'm going to go ahead and copy prepaid insurance. Right click, copy that. I'm going to put it in cell C6, right click, paste it 1, 2, 3. So note that we can see that which account's going to be debited, which account's going to be credited without even knowing what we're doing really. So now let's talk about what we're doing. So what is prepaid insurance? How did it get there? Why is it there? Well, prepaid insurance is an asset. We can see because it's next to all the other assets. Well, that's why the trial balance is a good cheat sheet to have. And we have set up the system so that we tell the accounting department, please, every time you pay the insurance, rather than you're going to credit cash with the check, rather than debiting the expense when you pay it, we would like you to put it into this account, which is an asset account called prepaid insurance. Why would we do that? Because prepaid insurance, by definition, we are paying the insurance before we get the coverage. And oftentimes it's a long time before. Oftentimes we pay for a year's worth of insurance. So that means that on an accrual basis, we don't want to expense it. If we expensed it, what would happen? If we expensed a year's worth of insurance down here, the month in which we expensed it would have a decrease in net income as compared to the following month, simply because we happen to pay it in that time period, even though it's affecting both time periods. So under the matching method, we want to allocate that out between the two periods, or whatever periods are covered, so that it has a good distribution on our net income and helps us to have net income that's comparable time period over time period. So we've told the accounting department, hey, put it into prepaid insurance, and then we'll just make the adjustment at the end. How are we going to make the adjustment? We're going to see how much coverage of the insurance was paid for and how much has yet expired. And so at this point in time, we could answer this question two different ways. The book or any kind of problem could ask you this question in two different ways. They could say, this is how much of the prepaid insurance has been used, consumed. That if that were the case, we would just use that number. That would be the expense. If, on the other hand, as this problem says, prepaid insurance as of 3/30 is determined to be, so that means that this number needs to be this number, 2005. We need to make an adjustment to make that number, the 4008, go down to 2005. So in this case, we have to do a subtraction problem, which would, of course, just be the 48 that is in there minus the 25. It's going to have to go down by 2003. So I'm going to do that same calculation over here. We'll put our cursor in D5. I'm going to say that this equals the 48 minus the 25 and enter. And we get that 2003. That's going to be the debit. And we're going to have an equal credit on the credit side of 23 as well. All right, so then we're going to go ahead and post that out and see if it does what we expect it to do. What do we expect it to do? Well, we expect this to go down to the 2005. So we're going to post that to the blue section of our worksheet because that's where we post stuff. We can post the expenses first. So I'm going to go down here to the expense. We're going to say equals. I'm in cell I-23. And then I'm going to go ahead and point to the debit in D5. So I-23 is D5. And what's going to happen when we hit enter? The expense is going to go up. It's going to put us out of balance by that amount. Net income will go down. And there we have it. And so notice what net income was before. It's revenue, sales, beating the expenses by the 9,628. Credits are winning. That's income, not a loss, even though it has brackets around it because the brackets represent credits. And then we increased the expense, which decreased net income. All right, so now we're going to post the other side. So I'm going to go in cell I9, and we're going to say equals. and point to that insurance, $2,300. What should happen? This 4.8 will go down to our 2.5, and that'll put us back in balance. So there we got it. There's the 2.5 equals what we wanted it to be, and now we're back in balance by the green zeros. All right, so I'm going to get rid of the green area here and go to the next section and go through our series of questions once again. This one will also be as of 4:30, because they all are, because this is the adjusting process. It says supplies on hand on 4:30 are $750. So supplies, we're dealing with supplies then. So if we go through our questions, what's going to be the account other than cash? Above the blue line are balance sheet accounts related to supplies. Well, I see an office supplies expense in the trial balance, so I'm going to right click and say that's probably one of the affected accounts. What's going to be an account below the blue line that deals with supplies? Well, we got supplies, office supplies expense. That looks like a good one. So I'm going to say those will be the two accounts. And if we look at all the expenses, which are all these accounts here, and you'll note why aren't I adding these as expenses? They look like expenses and they do act like expenses, but they're actually contra sales accounts. So those are kind of like part of sales, but they're the reduction of sales that we didn't want to put in the sales, so we made a contra sales account. So they act like expenses, but these are the expenses down here. They all have debit balances. We're going to make them go up by doing the same thing to it, which in this case would be another debit because expenses always go up. So I'm going to right click on that and we're going to copy the office supplies expense. Here's the date. We'll put that on top in cell C8, right click and paste it 1, 2, 3, formulas only. Then the other account must be the credit then. So the credit's going to go on the bottom. So I'm going to copy that. Copy the office supplies, put that in the bottom on C9, right click and paste it 1, 2, 3, values only. And so you can see, we can see which way we're going to go, debit this, credit that, even if we don't know what we're doing. Let's talk about what we're doing now. Office supplies, why is it up here? Why is it an asset? Well, we know it is an asset because it's in the green area with all the other assets. And how did it get there? Well, we told the accounting department, once again, the accounting department has been set up in such a way that we're saying, hey, accounting department, anytime you buy the office supplies, rather than just, we would credit cash rather than debiting the expense when we buy it, we would like you to put those office supplies into an account called office supplies. Why would we do that? Because it's similar to inventory in that we're going to accumulate the office supplies, count them at the end of the month, then determine how much were used. In so doing, we can write off or expense those supplies in the same time period that they were used rather than when they were purchased. Now, remember that supplies does have an exception. If we're talking about a small company or small pieces of supplies, we are not going to put an asset on the books for a year's supply of $25 paper clips because it's immaterial. It's not material for us to be capitalizing paper clips and then counting them and seeing how many we used. However, if we're using a lot of ink or a lot of paper or something like that, and we want to track the supplies and it is relevant to our expenses down here, then we should track them, count them, and record the expense in the time that the supplies were used rather than in the time period in which they were paid for. So that is going to be the idea, and of course that's our intro into inventory, and of course we have inventory now. We are a merchandising company, so we'll have a similar process when we think about inventory. All right, so that means that we need to make this number, well, let's see, we need to make this number be that number. We counted supplies to be 750. We have on our books 1,005 because what's on our books is what started at supplies at the end of last month plus all purchases, but it's not including all the stuff we used. And now we're going to say, well, we used enough to bring the supply balance down to 750 because that's how we counted it to be as of the end of the month. So we're going to pull out the calculator here and we're going to say that must be a subtraction problem of 1.5 that's in there minus the 750 that we counted it to be. And so we're going to have 750. So let's do that calculation one more time. I'm going to do that again here. Equals, to do the calculation, 1500 minus 750 gives us 750. So we're also going to have, of course, a credit of the same amount, 750. And there we have it. So let's post that out and see if it does what we expect it to do. What do we expect it to do? Well, we want this number to go down to 750 because that was the physical count. So let's post the expense first, however, because that's the first one.